Are you as cautious as I am as the stock market continues to hit all-time highs in the face of all of this uncertainty and confusion in the economy? Or are you optimistic? Actually, there's a serious case to be made for optimism, at least in the short term. I'll give you that perspective coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So if you're a follower of the Wise Money Show, you'd probably catch a tone that I am cautious. We are cautious on the overall market. And I've said it time and time again, not because I think a drop or a crash or anything is imminent. Like some people on Twitter or other YouTube folks are saying, it's going to happen tomorrow, or it's going to happen at some point this year, whatever. I don't think it's right around the corner. In fact, I'm fairly optimistic in the short term. I just think the reasons that the market is getting pushed up right now are likely not sustainable long term, and therefore you should have an adaptive strategy, a momentum strategy to complement or as part of your overall portfolio. One of the financial authors that I pay attention to, Ben Carlson, he writes a blog post, a wealth of common sense, fabulous insight, and really good writer and speaker. And so he had a blog post on the 16th that I thought was very, very compelling, at least synthesized exactly what I've been thinking and what I've been sharing with clients about why this rise in the stock market could actually last for the foreseeable future, even though it may be unsustainable, okay? And he breaks down several points as to why you should be optimistic about the market and why these highs actually could keep on rolling for a while. The very first is one that I talk about all the time, and that is momentum. The market has momentum right now. There's a lot of optimism right now and lots of positive energy. If you break down some of the charts like some of the nerds do about, hey, how much buying pressure versus selling pressure. I mean, most of the days going back for months, there's more buying pressure than there is selling pressure. I mean, the bulls are having their way, and they're driving the market. All of that optimism, that positive sentiment, I mean, that is real. There is momentum in the markets. You need to have a momentum strategy as part of your overall investing approach. And right now, the momentum, and it's been this way for a year now, or at least 11 months, the momentum is extremely strong on the upside. Part of that is the second reason to be optimistic, and that is the Fed has been driving the most accommodative financial conditions ever recorded, and they really have indicated they are not going to stop for a while. In fact, I mean, we could grab any of a number of quotes from Fed Chairman Jerome Powell. I mean, the most recent one that stands out to me, though, is when he talked about, hey, we're not going to make a change until the folks that need the help the most, the 20 million or so people unemployed right now, until they're helped, right? And that, obviously, I'm paraphrasing. It's a terrible job at paraphrasing, but basically, they're going to keep interest rates at zero, at low rates. They're going to continue to print money and have extremely accommodative conditions, and all of that means investors are optimistic and they're willing to take risk, and likely that's going to or could continue to push markets higher. And it's not just the Fed. I mean, the third reason to be optimistic in the short term is the fiscal spending and the fiscal stimulus. Guys, right now, we're going to be racking up, it looks like, a $2 trillion deficit without any stimulus this year. If there's not another stimulus this year, likely we're spending $2 trillion more than we're taking in. That is stimulating. Now, I'm very concerned about the long-term impact of that, but that is stimulating in and of itself. But likely, and I'll tell you, my brother texted me yesterday and said, Mike, seriously, what's the probability that there's another stimulus pass? He's an educator, he's administrator at a school in Michigan, and so he just said, what's your take? And I said, I personally, and I don't know the future, neither do you, but there's no question we have at least one more stimulus. The $1.9 trillion, I am surprised it's not passed yet. I'm surprised that seems inevitable. They're just working on some of the fine tuning right now. And guys, I think there's going to be more stimulus after that. I really, really do. I don't know who's going to be paying for it, but all of that stimulus getting injected into the economy, you really cannot fathom how much money's been printed and injected, and the more fiscal stimulus is, I don't think it's stopping. The more of that happens, the better I think in the short term it could be for the economy and the markets. And that all leads, hopefully, to a strong consumer. And Ben Carlson makes the case here. I would check out some of these charts. Maybe we'll throw some up on the screen right now. I mean, the consumer, even though there's 20-some million people unemployed, and there's a widening gap of financial inequality, we talked about that previously, about what happens when the governments print money and all of that, but the quintillion effect. Based on several indicators, the consumer is healthy. We've got rising saving rates, we've got higher bank balances, and we've got lower credit card balances. All of that since the pandemic. And yes, there's a huge margin between those that are feeling that financial health and those that are still struggling to get by. But on average, if you just look at the data, the consumer is extremely healthy. And then finally, or not finally, but the second to last, I mean, part of the reason why the consumer is healthy is the housing market is surging. The housing market's extremely strong. The demand for houses and for new houses, prices are getting bid up and bid up and bid up. Housing values are skyrocketing right now. And so the strong consumer and the high housing prices combine to the final factor here, and that is likely significant pent-up demand. Guys, that means the consumer has home equity to spend. Now, maybe they shouldn't. I would argue, I hope you don't, based on, but your overall financial situation. But the consumer has equity in their house that they could spend. They've got bank savings that they've banked up. They've got additional savings rate that they can start spending, and they've got access to credit card balances that are now lower, so they've got access to credit. I mean, all of those, I'm not saying that's healthy now, people should go out and spend those. In fact, I'd urge you not to do that, but likely old habits will die hard, and so I would expect there's a lot of pent-up demand, and we haven't even reopened yet. When the economy officially does reopen, all of those resources will be available to be deployed for home improvements, for that pool, for that vacation, for that whatever you've been waiting to do. And I actually think that pent-up demand will take a long time, potentially a couple years, to even make its way through the economy, simply because of supply. The demand will outpace supply, and that's how you get inflation, by the way. And so for all of those reasons, if you caught that, I think there's actually room to run here in this market. I think we are at wild speculation. We are at wild valuations. I am concerned that this is not sustainable, but I also think there's reason to be optimistic here in the short term, or at least the foreseeable future. For those reasons and more, hard to argue with those. Really is. Check out Ben's full blog right there to read more on the details. And listen, to me, the takeaway once again is stand as close to the exit as you are to the entrance. All of this works. It looks like it does. Is that explaining the past, or will it explain the future, and how far of the future? When the fiscal stimulus stops, when the Fed money printing and accommodative policy stops, what are we left with? That I still overshadowing all of that. There is a serious dark cloud that is over each of these positive things. So you've got to have an overall investment philosophy and approach that can work during these good times for as long as they last, but also be able to pivot if sentiment changes. And so that's a momentum strategy. That's a dynamic strategy. Work with your CFP on that. If you don't have one, you can contact a member of my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.